Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Financial psychology speaks to a deeper range of emotions and behavioral finance. Joining us for Financial Literacy Month, we have Jen Hollers, head of planning at Kestra Financial, to discuss. Jen, it's great to have you with us. Welcome to Trade Talks.
Thank you for having me, Jill.
You got it. Why does financial psychology speak to a deeper range of emotions than behavioral finance?
Financial psychology is about a deeper range of emotions. When you think about behavioral finance, you are talking about emotions, but it's more around herd mentality that drives market outcomes. Financial psychology refers to a deeper range of emotions, often driven by past experiences, money conflicts, bias. It's an unconscious financial programming that affects our decisions currently and in the future.
How do you set up clients for success from a psychology planning point of view?
Sure. So most advisors are quantitative in their approach for client relationships. So we find that if you only focus on the numbers, then the qualitative piece is lost. A lot of advisors have realized that they need to take a step back and spend more time on the why and less time on the numbers. So advisors have gone to extreme measures around even investing in their offices, turning their desks into couches, putting in windows from wall to ceiling around Zen gardens, almost creating a modern therapy environment for their clients. Others have led with personality tests in regard to clients' financial perspective. And then others have just led with financial planning. They won't have an investment management conversation until they've had a financial planning conversation. So they're bringing it back to the financial psychology of things.
You know, it's interesting, Jen, for all the years I've been covering Financial Literacy Month, 2023 is the first time that I'm hearing that consistent theme where you're just not a financial planner. So tell us about the business of well-being.
The business of well-being, planners are curators of their clients' financial well-being. As humans, we have two basic needs: the need to survive and the quest for meaning. And most of us have accomplished the need to survive. Once we become adults, we are less concerned about that. We are more concerned about the why, the quest for meaning. So as advisors and planners, if we aren't discussing our clients' whys, then we've lost the whole picture. So it's really important to go back behind the numbers and discover the why, because that's what drives client decisions.
What's the most challenging step in the planning process?
There's lots of challenging steps in the planning process, but the most challenging can be the implementing of a plan. It's really hard to get clients to take action if they don't understand why they're taking the action. So if you are able to spend time with the client on the front end, really around the psychology of financial planning and turning over all the rocks in regard to the decisions they made in the past and the decisions they need to make in the future, then that has a huge, that lends itself significantly to success in regard to client relationships. So let me give you an example. If you've got a client who is a high earner and has little to no desire around awareness for their spending or their saving, we call this an overconfidence bias. That client can be really challenging when you're trying to have a retirement planning conversation with them. But if you take a step back and you go into their past decision-making and into their bias, their money conflict in the past, then you can have a better understanding of what they need, whether it's data or talking about what their parents did, to better understand why they need to start saving for retirement, reduce their spending, and at least have some data points to work from.
All right, Jen, appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
Thanks, Jill.